All right, guys, what's up? I wanted to make this video real quick, once and for all, to kind of put this thing to bed, because frankly, this is very exhausting having to deal with this situation here. And it's a big distraction. There's too many other things going on in the market for you guys to be worrying about this. And that's this situation here with GameStop and, Robinhood and whatnot and what's going on there, okay? Because, like I said, I hate that I have to even address this again, but I'm going to do it one more time and once for all, and then we're done with it, okay? But anyways, so what we have here basically is a situation where things are, for lack of a better term, unprecedented. Why? Because you have a bunch of retail traders pissing off Wall Street, okay? So to kind of pretty much put this in perspective, for those of you that don't know, the way it kind of stands out, because a lot of people are kind of blinded by all the emotion behind all this and are forgetting how this thing is more than likely going to play out, okay? So for those of you that don't know about it, stay away from it. That's just my opinion. I mean, you can do it if you want, but my opinion, stay away from it. It's not gonna end up pretty, okay? So let's kind of take a step back here to see where we're at in the perspective of things, okay? Because the way it kind of plays out, it's about three key factors in dealing with this, okay? One, you have Wall Street bets and the retail traders, which are people like you and me who might trade stocks on Robinhood, Webull, whatever platform you use, retail traders. Then you have the hedge fund, which is Citron, Melvin Capital, okay? The little feud going on between them, okay? If you don't know about Citron, you can look them up. They're basically a hedge fund that takes a lot of short interest in companies betting that they're gonna go down, okay? And then you have, of course, the broker, Robinhood. Now, Robinhood is backed by Citadel, which is their market maker who executes your trade orders to, place your orders that you trade. Those are the three key factors in there. Wall Street bets and the retail traders, Citron, Melvin Capital, the hedge fund, and then Robinhood, Citadel, okay? Now, apparently, for those of you who don't know again, the feud is this, Citron took out a short interest in GameStop, betting that the company is going to go down. If you don't know what a short position is basically taking a position that a company is going to go to nothing, basically. Or the stock price on the company is going to go low, and you get that difference. Okay, it's basically borrowing shares from your broker. All right, essentially that's what they're doing there. So, Citron, Melvin Capital has this short position in all these stocks that everyone's going after: GameStop, BlackBerry, AMC, essentially the fundamentals in the company are bad. So naturally they're going to report that, that the company is going to go bankrupt. Then you have the retail traders at Robinhood who put together this thing that they're going to make this stock go up, cause it trying to go basically bankrupt by buying more shares into those companies, okay? So, because what happens when you have a short interest in a position into a company that you think is going to go lower, you're borrowing shares from your broker. Now, at the point that a stock keeps going up and up and up, you're going to have to, a broker is going to do what's called a margin call, where they need to get those shares back, and you basically are losing money as the stock goes up if you're in a short interest position, okay? And that's where Citron was at. So you need to look at it from all angles of this aspect and what's going on and what's the wrong thing that's going on here, because from this point on, it's almost like every party is doing something wrong, okay? So essentially, GameStop has, of course, ran up so much that it caused them to have to close their positions and wiped away a lot of their capital from Melvin Capital, okay? From Citron. And then you have Robinhood and Citadel who's doing some shady things. And the reason why is because a lot of different factors. There's no cut and dry thing to this, okay? It's different aspects in this thing that's going on, okay? So the thing with Robinhood, a lot of the traders that are following Wall Street bets use Robinhood, okay? And of course, they're running that stock up. Now, Citadel, which is the bank, the market maker for Robinhood, also is supposedly has a big investment in Citron. They finance them as well too. So the thing is, here's where a lot of things went wrong. Robinhood is limiting shares, and they're limiting to where you can only pretty much, now at this point, you can only buy certain shares. Before last week, they were limited to where you can only sell shares. That is pretty much illegal. You know, halting trading, common practice. Circuit breakers happen all the time. A stock gets too volatile, stocks halt. The thing here where Robinhood is in the wrong is the fact that they did it on one side, okay? You know, halting a specific stock, perfectly fine. But no trading means no trading. Not just you can only sell your shares, because what's that gonna do? Drive the price down. And who's that gonna be in a position to best fit? Probably the short interest who is betting that the stock will go down. And who owns an investment in that? Citadel, Robinhood. They back Citron, okay? So that's where that's the big no-no. You know, who knows what the SEC is gonna do about it? Who knows what the FTC is gonna do about it? I don't know, but they're definitely under investigation. But that's where they're in the wrong. It's changing the stock to where you can only sell it, you can't buy it, and that right there, big red flag, okay? So that's where that whole situation is with them. Aside from having the interest with Citron, obviously that looks very shady, okay? Now, another thing that a lot of people are forgetting too is that eventually, you know, well, first off, another caveat to that. What the retail traders and Wall Street Bets doing is kind of borderline illegal too, all right? It's called a pump and dump, where you drive a stock price up and then sell it out, okay? I mean, look up what a pump and dump is. That's if it gets proven that they've done that they kind of put that all together, a pump and dump, they're in trouble too, okay? It's a little bit of caveat in there. I think you have to have a certain, you know, you have to say buy at this dollar amount and sell at this dollar amount. I don't know, gray line between the SEC and FTC and however they're going to figure that out. But that's kind of borderline illegal as well too. It's called a pump and dump. So they're wrong on that side too with the retail traders. I don't want to hear no nonsense about, oh, it's for the cause, blah, 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 F Wall Street. Yeah, F Wall Street, but still, point of the matter is you can't do that, okay? So that's where they're in the wrong there. Third thing is, Citron was in the wrong too. I mean, if you're a hedge fund company, you have most of your position leveraged into one company, I don't care who you are, hedge fund, retail trader, you should not be putting most of your position into one company, no matter how sure you think it is. Because obviously you see things like that can happen. The stock will shoot all the way, you know, can shoot up. So they're in the wrong there too, because the hedge funds are leveraging other people's money. That's not, you know, the purpose of a hedge fund is to grow people's portfolio. And if you're leveraging all these people's money into one thing, that's a big no-no, big red flag, okay? So that is where that stands, all right? What I want you guys to understand, if you're not in, you know, GameStop, AMC, or any of these things in this position, stay away, because you're just going to end up losing your money. And not only that, I mean, ain't no telling what's going to happen with Robinhood now. All these lawsuits getting slapped on them for what happened, okay? So that's kind of a big thing there too. Yeah, I'm in AMC. I'm not going to lie to you. I had some position there, but I don't care. I could lose that money. It's just part of me wanting to stick to Wall Street, but I can lose that money. It ain't going to bother me. But some of you who are, you know, are just not starting out or putting your savings in there or whatever you're doing and trying to go in on these stocks, don't do it. It's just going to end badly for everyone, okay? So that's where we're pretty much at with that. And I don't want to hear no nonsense about, oh, it's for the cause, blah, blah, blah. Okay, no. It's always been about money. It'll always be about money. So I'm not going to entertain any of the nonsense that's different about it. That's my 2 cents on it. I'm going to leave it at that. So we need to focus on other things that are going on in the market. And no doubt it is some shady stuff. But that's been Wall Street since Wall Street existed, to be honest with you. And that's just what it is. So that's that, you guys. Let's get ready to make some money, all right?